No intro. There's going to be no intro today because there's a giant scam going on right now. And that scam's called Lending Club. Now, exactly what is Lending Club? I'm going to put the link in the description so you guys can go check it out for yourself and tell me what you think. Lending Club, and this is from someone that has a 4-figure account with them, and I have a positive return. So it's not like I put money in and lost all my money and I'm angry at the company. It's not the case at all. I've made money off Lending Club. I currently have an account open. I'm within the process of withdrawing my money out of the accounts, but I'm here to tell you it's a scam. And it's very risky, and to not use Lending Club or other similar companies like Lending Club. That begs the question, what is Lending Club? Lending Club is a peer-to-peer online lender. So like, let's say if I needed a loan for my house, I could go to Lending Club. I couldn't get a loan from the bank because maybe my credit's not so great or I don't like the bank side. Whoever, that's where Lending Club, steps in. And it's crowd-funded loans. So typically, let's say if I have $1,000, that'll be broken up into 40 notes, or that's, Lending Club's term for loans. And the minimum principal on that is $25. So 40 loans, $25 each from me, goes out to people, and many other investors will fund one loan. Let's say a $4,000 loan, my $25, this guy's $25, that guy's $25 will go into that loan, and then we make interest. It's a interest rate, and it's honestly it's a positive environment right now. It's rising interest rates, so we all make money off those interest payments, and then him repaying the loan also as well as the principal. So I get the principal back, the $25 I invested in an ideal world, and I get some interest back. Now, there's some serious problems with this model, and I'll go into those now. So first and foremost, you don't have access to your money for the term of the loan. And there's two terms, 36 months or 60 months. So you're telling me I can't access my money for 3 or 5 years? Yes, that's exactly what I'm telling you. You cannot access your money for the term of the loan. So you have no ability, if you needed to take your money out. It's not like the stock market where I have a position in, let's say, company X. And, whether my position goes up or down, I can sell company X and have the money in my account. And I can withdraw it or, buy another stock, whatever I want to do. Lending Club, they don't give you access to your money for the term of the loan. Who wants to have their money tied up for 3 to 5 years? Not me. And that's exactly why I'm drawing my money out currently. It's a rising interest rate environment. So, I can make more money, but also someone's paying more interest. And if they default, you lose the money. The money kind of just goes bye-bye. If they don't make their payments, sure, it ruins their credit. I understand that, and no one needs to tell me that. But at the end of the day, you're not getting your principal back. And that's $25 on a $1,000 account. Get a couple of those, and all of a sudden you're talking, a large, chunk of your actual account is just gone. And it's not like I buy a share for $25 and it goes down 5%, and I sell it. I walk away, let's say $20 after, all the fees and stuff with the brokerage. That's not the case. You either get your $25 back in some interest, or you don't get anything back. So it's almost hit or miss. There's a 50-50, is the person going to pay or not? And you can adjust, give credit to Lending Club. They group A, B, C, D, E in terms of like the person's credit worthiness, E being bad, A being good. But even at the end of the day, A isn't paying as much interest as E is. So higher risk, higher reward, safer risk, safer reward. So, it's a balance. And typically it's a blend of all different sorts of, accounts. And one of my B guys, something that should be good, 100% defaulted on his loan. So I lost my $25. It's not a big deal, $25, but again, we get a couple of those, all of a sudden we're talking some serious money. So there's no protection for the people that use their service. It's not like if 10 or more people default, they'll give you half your money back. There's no sort of any protection at all. So it's kind of risky, and you don't get your money, as I mentioned before. You're putting your trust as well in an individual. So, I don't really have much faith in people's individual credit because I don't know them. If it was to a friend, that, and I knew they have great credit and they're, have a couple businesses and they need a business loan, it's a different story. I don't know any of these people, and it's 40 different people. So the chance of at least 1 or 2 defaulting on a position is pretty high, in my opinion. So there's a lot of risk that goes within that. Instead of a company, if I invest in Facebook, they have millions upon millions on their balance sheet in cash. Maybe a company pays a dividend as kind of like an insurance policy to their shareholders. There's a whole group of companies working together to provide profits for their shareholders, or a bunch of employees working together to give you some profits. Here, it's like you're putting faith in someone's ability just to repay a loan, which I'm not really sure because I've never gotten a loan from Lending Club. I'm not sure how good the checks really are. There's a reason they couldn't go to the bank to get a loan. And Lending Club will say that it's like, they give better interest rates than the banks. Not really. They do a little bit, not really. Lending Club's really for someone that can't get a loan from the banks. And they can't get a loan from the banks typically because they have bad credit. And that's just how it goes. Now, a better option, I'm not just going to tell you doom and gloom, is the stock market. Stock market, you get dividends. You can sell your positions at any time and raise some capital. You can buy in as much or as little as you want. And if that's still too risky for you, why don't you look into something called Marcus by Goldman Sachs? It's something I use personally, so I can vouch for it. Right now, instead of a normal savings account, Marcus is an online savings account. So they have no physical stores or banks, for example, that have to hold your money or pay employees or keep the lights on. So banks give you like 0.05% APY, which is annual percentage yield, how much is yielding each year. Inflation is 2.9%. 0.05 is like, it's nothing. They might as well give you nothing. So what Marcus is the high APY savings account. I personally make 1.90% APY compared to the bank's 0.05. It's night and day difference. So I'm actually making real money, on some decent principal that I have saved. And that's just, to keep away as a rainy day fund. And I recommend, as much as I recommend stock market, and investing and all that stuff for people, I still want you to have some good, percentage of your income on the sideline. And that's, to avoid any market downturns or to have some emergency savings or something. I definitely preach that. Put away some money and save it for an emergency or rainy day or whatever. And when you do that, you might as well be able to get 1.90% APY. Why not? And so far, I've found no flaws in it. I can withdraw my money when I want. The only really catch is that you can only make 6 transfers per 30 days. The savings account is for emergencies. I really hope you're not having 6 or more times where you have to withdraw. And if I really had to withdraw, I could probably figure it out, and it renews every 30 days. Not really much of a downside if you ask me, but that's another option for you guys instead of maybe putting some money away and tying it up for 3 years with really no chance of ever getting it back. So that's all I have. Please stay away from those sites, but thank you guys, and I'll see you next time.